Let's talk about Texas cash out home equity loans. So a Texas home equity loan, Texas cash out, industry not or industry verbiage is the Texas A6. So a 50 A6. What does that even mean? Well, believe it or not, the state of Texas has a constitution. I didn't know that until I started in the mortgage business 20 plus years ago. So the Texas Constitution has all these laws and things about what to do and how to do things in Texas. Well, one of them is applicable to home equity loans. And so a home equity loan, when somebody's tapping into equity to get cash to do stuff, whether it's consolidate debts like credit cards and things like that, or to get cash out so they can go to Vegas or go spend the money however they want, home improvements, whatever. When they're doing cash coming out, whether it's in your pocket or going somewhere else that you want it to go, it's a Texas A6. And we got a link and I'll put that around there. This is about a Texas A6 12-day letter and the rules around Texas A6. So there's a whole, and we'll put a link somewhere under the 12-day letter that tells you all the details that make this unique. And Texas is the only state like this in the entire union that has all these extra rules. So let me tell you what this means. First of all, it's only applicable to a homestead or a primary home, right? A homestead property. So if it's an investment property or a second home, like a lake house or something like that, this does not apply. It's only for homes that you occupy where you live in it. It's your home and you're trying to tap into the equity. That's what makes it a Texas A6. The 12-day letter that has all this stuff outlined needs to be signed by the married parties. So in other words, let's just say a husband's getting a loan, mortgage loan, the non-purchasing spouse, if the wife's not on the loan, she, in this example, would still need to sign it. It's called a non-purchasing spouse. And both individuals must sign and date this form. And then that starts the 12-day clock. I'm using air quotes, but it really is a 12-day clock. So I guess somewhere in history, they were concerned somebody's going to close the loan in 3 days. And so they made it to where now there's a 12-day period before you can close on this loan if it's a Texas A6. So that 12-day letter does not start. I remember way early in my career, before everything was automated like today, if a loan officer were to forget to have this signed and it's like ready to close and it was discovered the day before closing, this wasn't signed, you then have to have everybody sign it and wait 12 days from that point. It was really not fun. Just you had to be on your game. So it starts once both parties sign and date it. There is still, by the way, a normal 3-day rescission period after closing, like it is with primary refinances. So you still have that 3-day period, even though you have the 12-day waiting period that leads up to it. And then also there's rules about we have to disclose and you have to see, final CDs the day before, business day before. So that's pretty standard in today's world as far as like execution wise, but you do have to see it in advance. So again, the final CD, you can't be the same day. We try not to here at the Mortgage Mark team. And most of the time, I'd say the vast, like 99% plus, like almost 100% of the time, that's not normally the case anyway. But again, it's just part of the laws here for this. The Texas A6 loans, they have to close at a title company, a lender's office, or an attorney's office. It can't be at your house, your work, your home, somewhere like that. So it's like it's got to be in an actual office. I once did a loan, it doesn't matter. So let's just say it has to be at the office. The loan to value, Texas A6 loans, they don't go above 80% loan to value. Meaning Texas wants the homeowner to have at least a minimum of a 20% equity position in the home. And that can stink because you're like, man, that's my equity. I want it. So on a $500,000 home, they won't let you tap into that last $100,000. No matter how much you need or want it, Texas law won't allow it. So it's at max 80%. So with that $500,000 home, it's a $400,000 total loan amounts that you can have, whether it's this loan or another one you already got on the property. Only one A6 can exist. So if you got a first mortgage and then, I don't know, a year or two ago, and somewhere in the past, you went and got a home equity line of credit, that's an A6 loan. You can't go get another one. So only one A6 can exist. Now you could refinance them and then redo it and get a new A6, but only one A6 can exist on a home at a time. And when you're done, this surprises people, you can't refinance that A6 for 12 months. So, the thought is they just don't want people going back and tapping the well and keep pulling equity out and hurt themselves. The reality is, it is what it is. It's just the law. So if you get an A6 and rates drop 6 months later, you got to wait 12 months before you can refinance that existing A6. There's no prepayment penalty. So if you decide that you win the lottery and you want to pay that sucker off, they can't have a prepayment penalty for Texas A6 loans. A couple other things. So the laws, some of these laws weren't always this way. Back in 2018, I think it was, is when changes happened. But forever before that, for many, many decades, there were rules, some of the old school rules that are no longer applicable. It used to be an old adage in the mortgage industry was once an A6, always an A6. That's not the case. After 2018, if you got an A6 mortgage, you can refinance it to a quote normal mortgage, like not get cash out, and be considered what I think it's like an A4. And so now it's not an A6. So a lot of those rules don't apply that I just said, but it used to be those rules always applied no matter what on subsequent loans, but that's not the case anymore. It used to be there was a max of 3% of fees. Now it's 2%. So in other words, if somebody's and that the problem with this law used to be 3%. So it's now after 2018 came down to 2%. So it puts a cap on what lenders can charge. And I understand the concept is they're trying to protect the homeowner from lenders charging these crazy fees. The problem is it really hurts the smaller loan amounts and the folks that don't need a lot of money. So for example, just yesterday, I was talking to a lady. She owns 20 grand on her home. No, I'm sorry. She owes 60 grand on her home. That's her first mortgage. And she wants to get 20 grand out to do some home improvement stuff and pay off some debts, whatever it was. But the problem is if a lender is limited to 2% in fees that we could charge on that $80,000 loan, that's 1,600 bucks. The flat fees for lenders, title, appraisals, all these third party fees come into play. That's way more than that 1,600. So it really can hurt us. Like we just physically, I don't say physically, but we can't do that loan because it's from a cost perspective, it literally loses money. So you're not going to see banks want to do that. Now, I understand again, they're trying to protect it. It is what it is. There are some, and I said appraisal earlier, but title policy survey appraisals, those are excluded from that 2% number, but it just makes it really hard for folks with lower loan amounts. And so for that point, that's a different video, different time. But a lot of times she, like this instance, I sent her to a bank to go get a second mortgage to get like a line of credit or something. And then lastly, what's now we can do properties with ag exemptions. Prior to 2018, that was not the case. In fact, fun fact here, it used to be that law existed, except it existed. You couldn't do it with ag exemptions unless you were a milk farmer. True. So like, I guess somewhere the milk farmers political action committee somehow had a big pull with Congress down in Austin and they made it to where they could get one, but other ag farmers couldn't. That's since gone away. Now anybody can get that done. So that is the 12-day letter. It says all that down below in a whole bunch of words, and that's okay. But that's essentially what a Texas A6 is. Again, if you have questions or if you need something, certainly reach out to the Mortgage Mark team. We are here to help answer all your questions. Check out some of our other videos about HELOCs and other, other A6 type loans, and let us know if you have questions. And as always, when you think mortgage, think Mark.